Welcome to the deep dive. We've got some fascinating listener input this time, focusing on asset tokenization, specifically how it might just completely reshape real estate.
Yeah, it's a big topic. We're planning to really get into it today, understand this potential shift.
So the core idea, just to level set, we're talking about taking something solid, like, say, an office building.
Right, a physical asset.
And converting its value, its ownership, into digital tokens on a blockchain.
Exactly. Each token is essentially a digital share, a piece of the ownership pie. Kind of like a stock in a company, but for property.
Okay. And the promise here is what? More liquidity, transparency, making it easier to get involved than the old ways.
All of the above, potentially. It addresses some long-standing headaches in traditional real estate investing.
Let's talk about those. I mean, historically, getting into real estate, it wasn't exactly straightforward, was it? Big barrier to entry.
Definitely not. You generally needed, well, a lot of capital just to get your foot in the door. Think hefty down payments.
Right. And beyond the money.
You're looking at lengthy, often complex legal processes, title transfers, contracts. It all takes time, and it can be opaque.
Yeah, and your money's tied up for ages, right? It's not like you can easily sell a tenth of a building tomorrow if you need cash.
Precisely. Illiquidity is a major factor. Plus, the timelines for seeing a return could be really long. Decades, sometimes.
Okay, so that's the old picture. How does tokenization propose to sort of smash those barriers down?
Well, the biggest thing is probably this idea of fractional ownership. Because it's digital, you can divide that building into, say, thousands or even millions of tiny pieces or tokens.
Ah, okay. So instead of needing like $500,000 for a down payment.
You might be able to invest with, I don't know, maybe a few $100s,
Hmm.
maybe even less in some models. It truly opens the door.
That's the democratization part we hear about, making investment possible for, well, almost anyone.
That's the core concept, yeah. Giving everyday people access to investment opportunities,
Yeah.
prime real estate, maybe that were previously just, completely out of reach.
So it's not just digital bookkeeping. The blockchain tech itself is crucial here, isn't it, for trust?
Absolutely fundamental.
Yeah.
The blockchain acts as this shared, distributed ledger. Think of it like a public record book that everyone involved can see.
And it's immutable, right? That's the key term.
Exactly. Once a transaction buying or selling a token, for instance, is recorded, it can't be secretly altered or deleted. That transparency builds trust.
So it cuts down on potential fraud or disputes over who owns what.
It significantly mitigates those risks. Yeah, it makes the whole process much clearer and, frankly, more secure for investors. Increases confidence.
Okay, so for an investor, maybe someone listening, what does this change in practical terms, beyond just needing less initial cash?
Flexibility is a big one. Instead of putting all your eggs in one local property basket, you could theoretically buy tokens in multiple properties.
Yeah, interesting. So you could diversify across different cities or even countries.
Potentially, yes. Spread your risk, access different markets, all without the usual hassle of directly owning and managing foreign property. You're buying a share, essentially.
Makes sense. Now let's flip it. What about the property owners, the developers? What's in it for them?
That's a really important angle. For them, it's primarily about accessing capital.
How so?
Instead of just going to banks or, large institutional investors, they can tap into a much wider global pool of potential investors through token offerings.
So potentially faster fundraising, easier access to money for new projects or renovations?
Could be, yes. Imagine funding a new development by selling tokens to hundreds, maybe thousands of smaller investors worldwide. It could really speed things up.
And the sources we looked at hinted this could have broader effects, like on communities themselves.
Yeah, think about urban development. If it's easier to fund diverse projects, maybe affordable housing, community centers, green space, because you can gather investment from a wider group.
Including maybe people in that community.
Exactly. It could fuel neighborhood revitalization. Projects that might not fit the traditional funding models could suddenly become viable. You could see communities being shaped more directly by collective, smaller-scale investment.
Wow. Okay, so when you pull it all together, this feels like more than just a tech trend.
I think so. It's potentially a fundamental shift, a paradigm shift, really, in how we think about owning assets, especially illiquid ones like real estate.
Towards something more accessible, more democratic.
Yeah, greater financial inclusion, more innovation in how projects get funded and how people build wealth. It's quite transformative, potentially.
It really gets you thinking, doesn't it? If you can tokenize buildings, what else? Art, collectibles, stakes in small businesses.
That's the big question, isn't it? Where does this technology go next? What other traditionally locked up value could be unleashed? Definitely something to keep an eye on.
Absolutely. Well, that's some serious food for thought. Thanks for breaking that down.
My pleasure. Always interesting stuff.
Until next time, keep exploring.